of the stream chat. Chat files, good morning, how are you? RED, Nurse Lady, DE, Sam 13, welcome to Discord and Yellow Tunnel. All right, so 15, let's start. Again, welcome. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. Today, we're going to have a live trading room open to trade stock and options using both Yellow Tunnel and Tradespoon technologies. Welcome on Discord, welcome on YouTube, and welcome on GoToWebinar. We have now 3 broadcasts live. Trying to be available as much as possible. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. You can do that on Discord inside of the stream chat. You can also do that on questions in the GoToWebinar. If you have any issues or any questions, please don't hesitate and type them, and I'll be sure to address them. My bio, if you're new, I was Executive Vice President, Head of Technology at Options Express. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. I started there in 1999, 2000. Started Tradespoon in 2012, started Yellow Tunnel in 2018. Been part of several hedge funds, several startups here in Chicago, always in fintech companies. I want to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures: trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before market opens, it's very important to have a pre-market routine. I encourage you, to wake up before market opens, look at the futures data, right? Is the market up? Is the market down? And what are the main news that drives the market? We have, inflation data from Britain. We had retail sales from United States. There will be Fed meetings notes released at 2 p.m. Eastern time. All of these data points can affect the market, right? So it's very important to be aware of them and make sure that your portfolio, you know what your volatility in your portfolio and how can it respond to this news. In a journal, I would write down, main support and resistance levels, and what you will do at these main support and resistance levels. If you're a day trader, you look at 1 hour chart, 15-minute chart. If you're holding position overnight, probably you look at the weekly chart, daily chart, maybe 1 hour chart, and prepare for market moves, right? I actually was referring to the book that I'm reading now, and the author is going over Stoic philosophy, right? Whether it's Stoic philosophy, psychology, or religion, they all converge in terms of the main message. One of the main messages in the book, you have to go through. I mean, first of all, gratitude, right? And, Stoic philosophy just assume this is whatever you're doing, this potentially might be the last time you're doing it, right? So you can enjoy it, right? So, and we're not talking about death. We're just talking about even things we take for granted, right? So the gratitude and appreciation for what you're doing. So, and empathy toward what you're doing is very important. And the other main point was the negative scenario, future rehearsal. I call them future rehearsal exercises. Marcus Aurelius calls them negative visualizations, negative scenarios. But the idea to look at your portfolio, right? How does it translate into a trader's world? For traders, it's going through positive and negative scenario, right? Before market opens, in your journal, you want to write down your positive and negative scenario. What does it mean? You need to think about what your stop losses are and target gain. It should not be a mental stop or mental target gain. I would write it down in a journal. And I would, for every trade, I would record it, what your target gain, what your stop losses are. And I would grade myself, right, in the journal. If I followed the process, I would put A and B, and if I don't follow the process, I would put C and D based on outcome. Again, process versus outcome, right? The author actually says process versus outcome versus faith, right, or versus belief, right? So you have to have a system. You have to have a belief in the trading system you're doing, right? That's the requirement number one. Not requirement number two, you have to have goals, right? Daily, weekly, annual goals in terms of your returns, right? And then you have to have process, right? And you cannot, you can't have goals without the process. You can't have process without faith. So these are the three requirements, right? And it's very important to document them, to grade yourself, and to be systematic about this. So one rule, when it comes to process, to me, it means you have to have cash, right? I propose market is still volatile. Volatility is probably going to persist. I don't think, we're in the bull market. So for that reason, I propose 50% of your portfolio should be in cash. If you think we are in a bull market and it's a soft landing, still, you can use maybe a small, maybe you have smaller cash allocation, but still, then I would say 30% of your portfolio should be in cash. The second one is portfolio drawdown. In terms of portfolio drawdown, I encourage you to consider the following 4 positions, right? You have to have number of positions. You can't be, every time you go on the news and somebody talks about a stock, you just want to buy it. You do have fear of missing out, and you do have, you do want to listen to different sources, which is fine, but there should be a rule of what's the maximum number of positions, despite how, well presenter sells this signal. So I propose to have, no matter what happens, only have 4 positions on average, right? So 4 positions on average, maximum exposure 2.5%, right? On average, right? Some people, larger account, more experience, maybe they have 8 positions, and maybe they have 1.5% account value. But when you multiply these numbers, we all probably experience the same emotions, right? If the market, if your portfolio is down 10%, Nobody's happy about this, but this is normal. You prepare for this event in case market sells off, and you can adjust and you can repair your positions and move on. Most people, if the portfolio is down 20-30%, then they start making mistakes, right? Their emotions are taken over. So for that reason, to avoid trading based on emotions or avoiding, not be able to sleep at night, you need to have that threshold in terms of where no matter what's going to happen, you're not going to lose sleep over this. So for me, it's 4 positions, 2.5% of account value, right? Then I know whether it's a soft landing or hard landing, my maximum exposure to the market is 10%. Right? So that's a very important rule. How do you determine? The 4 position is straightforward. Just you look at your portfolio and you look underlying, right? You might have condors, but I would still consider it as 1 position. Let's say Microsoft or Morgan Stanley. And then 2.5% of account value per position. That is a very important rule. How do you calculate this? Again, it's going back to the process and going through the future rehearsal exercises, right? You can look at the spiders. Let's look at the stock forecast toolbox. You can find the same information, in Yellow Tunnel, Earnings Power Trader. What did it happen? Let's see. Just find this. All right, I gotta look quite some, but the idea is that you can find this on both places, right? Okay, so there it is. Sorry about that. In terms of spiders, right? So the spiders support is at 425, overhead resistance is at 436. Pre-market, we're at 425, right? That's important support level, and that's what the model tells you. So 425. For day trade, I would consider 425 as your support. You can clearly see short term, that's the main support, right? That's the first breakout above 420, right? Failed, and then rally continues, right? So we're probably trading in 3 phase, wave 3 or wave 5. So that's your key support, 425, right? As long as the market is trading above 425, bulls are in control. And facing the overhead resistance is now 431, which is 200-day moving average, right? Spiders are reached close to, touched the 200-day moving average. They're facing the downtrend from January and also the 62% retracement. So a lot of overhead resistance. So let's say, there's everybody's divided in 2 camps right now, soft landing or hard landing. People who believe in soft landing, they think the market will continue going higher and will reach 460. Everyone who is in hard landing thinks that the market is overbought and Fed will not pivot and the market will pull back, right? Those are the 2 choices. And third camp, don't know, right? Don't know. The third camp don't know, usually following the crowd, right? Everybody's buying, so they're buying, and everybody's selling, or they're selling, right? They just react to the price action. They don't really have a strong opinion. Market goes up, they're buying. Market goes down, they're selling. People who do have an opinion, like, if they're hard landing, then they're probably not buying. And if they're soft landing, then they're continuing to buy. Since bulls are in control, let's go through the soft landing scenario. You think we're going to continue to go to 460? Right? Maybe not tomorrow, but in the next couple months. So if you're buying at 425, we talked about, we're 426. Let's say you think that 426 level will hold, right? So you buy. Right? What's the next level of support? If we do break below 426, well, it's the breakout, right, after the CPI data. it's around 420 to 417 level, right? So that's your support number one, right? So that's anywhere below 417 probably should be your stop loss, right? If we drop below the pre-announcement of CPI data, better than expected CPI data, most likely market will reverse. So that's your support number one. If we do break below that level, you have second choice support number two. So to determine the position size and go through this negative scenario visualization, right? You have to be prepared for that event, right? You have to be ready for that event, and not to show the emotions, right? Stoic philosophy. So how do you do that? You look at these two support levels, and it depends based on how, what kind of trader are you, right? If you're thinking about 1 or 2 days, then I would look at support 1. If you're holding position for a couple of weeks, right, or a month, then obviously support 2, right? Each candlestick is 1 day. So in 2 days, we're probably not going to reach, 406. But in 2 weeks, we could, right? Or in 3 weeks, we can definitely reach 406 based on the rate of change and, the distance market travels and the time, right? You have to think about time and distance. In 4 days, it's reasonable to assume we can reach S1, but probably not reasonable to reach S2 unless there is some kind of bad news in the market. And same thing, S2 is probably, 2 weeks. So if it's S1 and it's 418, your risk is 426, right? Let's call it 416, right? Make it easier. So 10 points, right? Your stop loss is 10 points, right? You basically say, okay, I buy into, I'm in soft landing. If we drop below the level where CPI was announcement, then probably this rally is on pause, at least short term, right? But as long as we are trading above 418 level, I'm bullish. So I'm buying at 426. I'm going to exit out at 416. I'm risking 10 points. What is my position size, right? And this is where important level. It's not because it's a Stoic philosophy or it's, psychology 101, you want to go through these time traveling exercises. This is very practical, right? This is purely, you need to know position size. Do I buy 10 shares, 100, 1,000 shares? How many shares do I need to buy? Well, the only way you can know how many shares you can buy is to know, what the stop loss is, right? So I propose to always risk the same amount, right? Going back to, having a belief, having a discipline, or process and outcome, right? To be process oriented, the size should always be the same. So I propose that it doesn't matter if you're trading, futures or options on futures or, Forex, or penny stocks, doesn't matter. Whatever the most volatile asset class you can find, seems like everybody, when they start trading, they gravitated toward very volatile asset classes, even though they're probably one of the hardest asset classes to trade. But nonetheless, that's fine. It doesn't matter, right? If it's a low beta stock or high beta stock, if it's futures, Forex, the message is the same. Risk the same amount. $250. So how did I write this account? I assume that average account, yellow tunnel, Tradespoon is $10,000. 2.5% is $250. If you're doing day trading, you need to have at least $25,000 in your account. So you're not marked as pattern day trader. For day trading, if this is a 2.5%, when you do day trading, because you're active trader, you trade more often than no more than 1%. Right, and that's where some of the target gains for day trading, I use 0.5%, 1%, because you don't want to, you can, if you're risking less than 1% of your portfolio, you're probably not going to make more than 1%, unless you're doing some unusual options activity or some kind of low probability trades. So 25,000, 1% still $250. So $250, if that's your maximum exposure, then 250 divided by 10 points, I propose not to buy more than 25 shares, right, of S&P. And that's the answer for any, if you're buying Walmart because it rallied, or Morgan Stanley or Google, doesn't matter what asset classes is there as of right now, because we're still trading in the bear market. We are in highly, well, at least spiders, right? Definition is 20%. I don't think spiders are really 20% yet. So then you know what your maximum loss is, right? 25 shares times 10 points, so $250. If you assume that S1 is your stop loss, and you will exit out if the market drops below 416 level. Biggest mistake, if you buy 25 shares, 10 points, right? Question usually on spreads. How do you do this with spreads? Well, same thing. You can do, let's say, $10 spread, right? Or $5 spread. Spiders is liquid, but sometimes there's different strike width, right? $400 stock, it's probably $20. $100 is $10 strike, $50 is $5 strike. But let's say $400 strike, $10 difference, and $10. This is a strike difference. Usually, you want to get 30%, right? So this is your profit, right? And then this is your risk, $7. And then you executed around 50% stop loss, right? So in this case, 50% of $7 of risk would be $3.50. That is slightly higher than $250. So then, as soon as your position is down $250, you will exit out. So that's how you would trade options, right? Versus trading stock. The mistake would be in both cases, whether you're doing stock or options. The mistake would be to determine stop one, right? You're buying your stop loss 10 points, 25 shares. Let's say market does drop below 416, and you decide, well, Vlad said stop two will hold, right? So 406, 38% retracement, will hold, right? If the 50% doesn't hold, then 38% will hold retracement from all-time high to this year low. So, and then you're waiting for stop two. The problem with waiting for stop two, if you bought 25 shares, what is the biggest problem is that now you're down 20 points. 20 points times 25 shares, now you're down $500, where your rule is $250. And this is where you're breaking your rule, right? You basically, you sacrificing process, right? Versus outcome, right? Because outcome is more important to you. So I propose, if you want to be a disciplined trader and have faith in the process and have long-term success, that you do not do that, right? You exit out the position. All right. Any questions on position size and trades? All right. Let's look at the earnings. We have ADI continues to trade lower. So let's go over this. So ADI. Again, one of my favorite strategies, whether it's earnings, power trader, or lead trading circle, is selling out of the money options spreads. So I sold 167.5 put. ADI is trading at 179. It's still out of the money, but just like Home Depot yesterday, ADI can continue going lower, right? So it dropped, continues to go lower. I have to make a decision, right? So let's look at the prices of ADI right now. Right, so iron condor, selling out of the money options. They usually I do 2 times estimated move. All right, so, well, the short call trades worthless, so I can close that. Okay, so now I have to decide on the long call. sorry, on a short put. So the short put is now trading at 80 cents. So I collected 88 cents. It's trading at 80 cents. I mean, I can break even, right? I can break even or try to defend this trade, right? Market is down. QQQ is down 87 basis points. Semiconductors are down almost 2%. It trades lower. One way to defend this, again, I can, I have a short put, which is a bullish position. I can short the stock, right? I can short the stock and try to make this a profitable trade, right? Or wait, right? Those are the other choices, right? Assuming that the sell-off will not accelerate and I wait, then, and the market can rally, right? Then the premium will decay, right? The short put, right now it's trading at 80 cents. It might trade. So I can wait till the end of the day to close this position, right? Because if I don't close at the end of the day, and let's say, depending where we're going to close, right? Let's say ADI close at 170. It's still out of the money, but tomorrow the sell-off might accelerate, right? Or after the Fed meetings, the sell-off might accelerate. So then this would be a losing trade. So it's important to kind of to make that decision, right? And not hold the position overnight, right? So the three choices: wait till the end of the day, and maybe ADI will get close to 174 level. Close position now, right? And break even or slight loss, or sell short stock with the idea that it will continue going lower. Usually I like to wait at least 10-15 minutes before making that decision, and then decide. You can look at semiconductors, right? It's highly correlated to semiconductors, and pullback, based on retail numbers. Looks like retail numbers are a little bit worse than everybody expected, or just an excuse for the market to pull back. So we'll keep an eye on ADI. If you did lows, continues to go higher. TJX rebounded. So that's the other earnings that you can consider trading. All right. Any questions? Bob, hello. Good morning, Raymond. Good morning, Lalit. Desi. Good morning, Desi. Fred, good morning. John, grateful. Thank you for sharing. Following Carmen, the spiders. The question is, what about following the spiders? It does say it's going higher, right? So you have to respect the price action and the volume action. And the price and volume basically says that market is in uptrend, right? So you can follow just the spiders. I usually, spiders is a tool, it's a model, right? I do both quantitative and qualitative analysis, right? Quantitative analysis, clearly spider bulls are in control, and the path of least resistance is to continue going higher. But qualitative and also 6 months prediction, it says 411, right? We in June and May, model predicted the low, and the market traded 5% below the low. Right now, it's trading 5% above the high. So I know, based even on the technical indicators and long-term models, the market is extremely oversold, right? Already overbought. It's extremely overbought by 5% based on the technical indicators, neural networks, model, RSI, whatever, MACD. You can look at, I don't care what indicators you're going to look at, market is overbought. And it's facing 200-day moving average, and it's facing downward trend, and we still have inflation issues. I don't know how, Europe and Britain is probably in recession already. So for that reason, for more qualitative, I'm not just following spiders, right? 10-day spiders does, if you 10-day short-term trader, yes, it can go higher. But beyond 10 days, it's going to have hard time breaking through this 430 level. Can it go higher? Sure. If you're day trader, you might want to. I mean, today it's a downtrend, right? Market is down, so I would be careful, right? Amazon's down, spiders are down, QQQ's down. I would be careful. All right, let's look at our ADI. I want to make sure we don't miss this. All right, any other question? JP Morgan. Let me prepare this trade. All right, so ADI, I do want to defend this. Similar to Home Depot, it wasn't very successful, but it's a small loss. But okay, so let's do the same thing. ADI, so maybe 30% of the position. So if it's 100 shares, maybe you can do like 30 shares. Depends on how aggressive you are. And I'm going to sell short. Let's see. Oh, maybe I can get 173.55. So I'll put it away from the market for now. Maybe it can rally. And then I do want to put a put, closing the put. Well, if I can close it for 40 cents and just get out of this position profitable, that's another choice, right? I mean, I want to, ideally, I want it to be a profitable trade. So I collected 88 cents, right? I mean, I do have hedges. Maybe I can close the hedges until, well, they're still worth something. All right, so 157 put. It's closed for 15 cents. See if we can get filled. And the call. Okay, so probably will not market, by Friday, ADI probably will not reach 195, right? This is the hedge. It probably will not reach 157, right? Very low probability. So I'm gonna try to close this. And then 167.5 put, either sell it for 173.55 or try to close 167 put for 40 cents, whatever comes first. And we'll monitor ADI, see how much further it can rebound. Usually when I look at the 15-minute chart, right, this is probably going to be overhead resistances around 172.65. The next one would be 174, right? Usually when there's a gap on the down market, it will probably not going to break above 174 unless we have some kind of a reversal like we had with Home Depot, right? In the middle of the day, bulls are taking over and some news happens like after the Fed decision, maybe after the Fed decision continues going higher. But other than that, that's probably where All right, so let's wait for ADI. All right, let's review the other positions. Let me know if you guys have any questions on Discord. All right, let's review the other positions. Okay, so, I mean, if you did lows and TJX, they're up slightly, so you can close the short put. And if you did short calls, you can close that. That's all profitable. ADI, we have to manage, right? ADI, we have to manage and look at it. Maybe if it drops below this level, then short the stock to protect. Meanwhile, Spiders is trying to rebound off of session lows. QQQ is at session lows, and semiconductors continue to pull back, right? And semiconductors are usually the weakest, you know. Lately it has been was NVIDIA and Micron downgrading their future revenue. It's been one of the underperformers. All right. So let's see what else is interesting. ADI. One is the home builders down 2%, metals and miners down 2%, right? So value stocks are under pressure. Energy is flat. Germany is down 2%, again, higher than expected inflation in Britain. Europe is probably a similar situation. Retail, biotech, so risk off, right? Small cap, consumer discretionary, banks. Oh, JP Morgan, right? Sorry. JP Morgan, again, was yield inversion. I mean, it's down 92 basis points. Yield is higher, you know, better than, you know, worse than expected CPI from Britain. But it's trading in the range. Still yield inversion, right? 12 plus 34, 46 basis points. So it's going higher, right? The spreads in, you know, are widening, right? Across all the credit structures, right? It's not just 10-year and 2-year treasuries. High yield, you know, this is not good for the market, right? Every time this gap widens and more yield is inverted, then that's putting pressure on the market. Dollar also now looks like it found support. It pulled back, but still at 20-year high, right? Not a very good setup for any stocks, specifically JP Morgan. So can this rally continue? Incrementally, yes. You know, you have to respect the price action. Incrementally, JP Morgan, you know, if you look at it can continue going higher, right? Strong vector, it's a strong move. It's up, what did we say, 15% last time from its lows. 17% higher, you know, strong vector to the upside, but underperforming the rest of the market. So it's still trying to close the gap. If the market continues to rally, then it can get to 125, it can get to 131, but, you know, selling short call spread, you know, 132, I don't know, 137, or 135, 145 call spread, I think that would be my strategy. I would not chase the market to the upside. I would wait for some kind of a signs of, you know, top building process. Right now, it's one day doesn't set the trend, right? But if this week and next week we're still staying below 200-day moving average, then I would maybe get more aggressive on shorts. For now, one day you just have to wait and see what happens. It's too early. Any other questions? Art pullback, gold miners pulling back, silver, metals and miners, copper. Okay. Let's go over the rest of the positions. Let's look at ADI. Looks like ADI is pulling back. All right. While ADI is trying to find the bottom, let's go over the rest of the positions. So Desia and then Carmen. Carmen, when I say unusual activity, right? Usually, like when you listen to the news, right? There are a lot of people are using unusual options activity to buy out of the money calls. By definition, buying out of the money calls is a low probability event, right? 90% of out of the money options expire worthless. So by definition, unusual options activity, you're not going to have 80% success rate. I doubt you're even going to have 50% success rate, but you might have 30% success rate, which is fine as long as the winners are out. You invest in $1 and you're making $10, and then the other 7 trades that went against you, you're losing less. So it's still a game of numbers, right? Over a long period of time, your proceeds from the winner should be greater than the money you lose in trade, right? So but it's a low probability. Every time you buy out of the money call or you buy out of the money put, the odds are against you, right? The time is ticking, and unless the stock price accelerates, right, the gamma accelerates, you're gonna most likely lose the money. Close put at 65 cents. Okay, very nice. I did not. We'll continue to monitor. Bob, what's the financial news of, the retail numbers, right? So the first one was the retail numbers. They came in flat, right? Expectation was 0.1%. They came in flat, including gas. If you exclude the gasoline, I think they were higher, 0.7. But they're a little bit less than expected. Retail sales X motor vehicle 0.4, and I think X the gas it's 0.7. And then we have Federal Open Market Committee minutes from the last time that the math, right? And then you have Fed speaking. Michelle Baumann speaks. So it could be more volatility. Anonymous, any invest in past trade which failed? Well, last trade which failed was Home Depot, right? So yesterday I did Home Depot, right? Anonymous asked about Home Depot. Is it Anonymous? Is it the name, or is it just Anonymous? I think it's Anonymous, but okay. Sorry, if you can just update your profile where it, we have the first name, that would be easier. So Home Depot, right? I sold 84 cents and 90 cents, right? So collected $1.80. I collected $1.80 and I closed the 335 call, right? Because yesterday I did not know the outcome of retail, right? Now I know it's worse than expected, right? It's worse than expected. So I did not want to take the risk, right? I could have held on to 335 call on Home Depot, and at this point it would be a profitable trade, right? Because it dropped, significantly from the 333 level. But it could have went the other way, right? It could have continued going higher. So for that reason, I closed the spread, right? So I'm down 10 cents plus the hedges, so down 30 cents. I did try to, again, I thought we're going to rally towards the end of the day. So I bought the stock, but again, I used 30% because it was out of the money option. So bought 30 shares, and the stock did drop towards the end of the session, right? People were concerned. We had a reversal, probably in the middle of the day. So in retrospect, I mean, we have similar situation now with ADI on the opposite side, right? On the other side. So you have to kind of figure out, so that's the example. Carmen, thank you. Anonymous, thank you. Tech crude oil next 10 days. I mean, 10 days is very difficult. I mean, we have Jackson Hole meeting next week. So a lot of people are concerned, if the Fed, every time Fed speaks, and if they're not changing their rhetoric and the market is overbought, I think the risk is to the downside, right? Next 10 days, even though the price action is to the upside, the risk is that this rally could come to an end. And again, one of my rules is you cannot determine, instead of trying to find the bottom, right? You look for bottoming process, right? And bottoming process takes time, right? When we were at 380, it was the same conversation. I said, it's one day doesn't set the trend, but you try to look for bottom building process. This is a kind of a classical example of bottom building process, right? Very violent, moved up and down, right? And it, in a span over a month, right? At least 30 days of up and down price action. Same thing is going to happen here, right? That I have a pretty good confidence. So same thing is going to happen here. The question is, how long do these bottoms build? Sometimes it's, couple weeks, sometimes it's, but one day doesn't set the bottom. So you look for top building process, right? So, day 1, day 2, day 3, day 4, we're not making new highs. We're at 200-day moving average. At some point, either we're going to break to the downside, right? Or we're going to break to the upside, right? Those are the two choices. I think the risk is to the downside. And that obviously, across all asset classes. Including crude oil, right? Crude oil is sitting on this support. It's very weak, and I think if the market is going to go down, crude oil will follow. If the market rally, on one hand, crude oil is extremely oversold and it can bounce in the next 10 days. So I would not be surprised that it bounced to this or this level, but at some point it's going to break down. Next 10 days, hard to tell. It's hard. It's hard to tell. But short term, it's overbought and probably, at least for now, it held this level. But it's very vulnerable. Any negative news and it's going to drop again. It's going to drop, and there's really no support below this 85, 87 level on crude oil. Thank you, Fred. Thank you. Any questions on Discord or YouTube? So a few announcements on YouTube, right? We're broadcasting live. Please click on subscribe button. If you find this information useful, please click on subscribe button. If you like any of the content, please click on like button and share it if you're part of any forums. That would be greatly appreciated. The more people we can, a lot of people have questions about crude oil, JP Morgan, Morgan Stanley, and ADI. So the more information we can share, then we can help other people, right? So, and help Tradespoon to grow. So if you can do that, if you're part of any forums, please do that. If you're on Discord, same thing, please do this on Discord. And then I am part of the board of directors on gate.org. It's gate.org. I'm going to paste this. Again, I was born in Ukraine. I have family there. I talk to them every week. It's a very sensitive subject for me. So I'm part of this website. I'm trying to raise awareness that there are still millions of families that have kids that are being dislocated. They need food. They need to repair their houses or find houses where to live. $100 can help one family buy groceries for a month. So you can donate to a specific family. You have these cute pictures where you get personal thank you. You can select family that you want to say thank you to, and there's now. So I will encourage you to consider, and this is a good cause. And if you're trying to figure out which Ukrainian fund raise to contribute, then this is one of them. So please consider. Thank you. All right. Okay, where are we? Let's talk about ADI. Okay, let's see. Where's the trading? All right, let's review the other positions. ADI is trying to rebound. All right, so I'm going to short the stock. Try to defend it. I think 174, 173 level will hold. All right, so let's see, 170, 80. Sorry, and 109. Let's see, 170 and 109. Okay. So I'm trying to get filled at 171.50. 171.50. All right, let's review the rest of the positions while we're watching ADI. We have 5 minutes left. All right, so FCX. I have a put spread and a call, right? So still have 35 call and put spread, 30-25 put spread. Again, I encourage everyone to consider building market neutral positions, right? If you have a stock or you have a call spread, consider having a put spread, right? Because market can, pull back. So FCX is trading above this key long-term resistance support, right? This was the almost 12 months low that it broke, and now it's trading above that level. But again, I would consider having both long and short positions. So that's FCX. Morgan Stanley, pull back. So still long Morgan Stanley. This is a new position using dollar cost average. Again, overall, still a bearish portfolio, but I do offset with some of the long position like Morgan Stanley, one of the strongest stocks. So still long Morgan Stanley. Main hedges are in QQQ, right? I have 280 put and 240 put that I closed the short leg of the put spread, and I'm bearish by selling 330, 350 call spread, right? Selling, so both bearish trades, 330, 350 call spread and 280, 240 puts. Still bearish on XLF. This is straight, both positions are bearish. I have 350, 380 call spread, which is bearish, and then I have 35 put. But all going out to December, because it's hard to determine what's going to happen in the next 10 days. I think it's a little bit easier to determine what's going to happen in the next couple months. And then XOP. Same thing, both long and short. I still have 145, 150 call spread. I closed half of the position, and now I have 130, and also have 130, 120 put spread. Meanwhile, ADI continues to go lower. Right, any questions on Discord? We have a lot of users on Discord. Thank you for participating. Let me know if you guys have any questions on Discord or YouTube. Stream chat, you can find, it says pound stream chat is where you can ask questions. I'll show it here. So thank you for participating. We have a lot of people here, but under stream chat, right? If you click on stream chat, you can type here and I'll be able to answer any questions in case you guys can't see this. But this is where you would type in your question. All right. Mac closing bell. I think today is Wednesday. Actually, I am doing the closing bell today. I am doing a closing bell. We'll set it up. Let's go over. I'm not sure what announcing earnings. Let's try that. Let's see which companies announcing earnings today. Cisco. So Cisco announcing earnings today. I would wait till end of day, right? Because market is volatile. Cisco is down, outperforming the rest of the market, but not down nonetheless. So can find the trends you're talking about in here. You can find all trades on the website as a recording. All right, so you can find the recordings. Let's say, please join. Join. Okay. All right. So Cisco announcing earnings. I would wait till end of the day. Right, looks like the semiconductor sell-off is accelerating. Right, we're continue to trade lower. Right, pretty bearish setup. Right, unable to break through this overhand resistance. 5 times in the past, I don't know, 6 months, not 6 months, 5 months. So in the past 4 or 5 months, 5 times, semiconductors tried to break through this level, and now you have a gap and pull back, and we're still trading lower. So But Cisco is also very, so we can prepare. It's trading at 46.51. 2 times estimated move. I mean, it dropped 13% last time. I mean, it did have a big drop last time, 13%. So it could be up to 13% move. Let's look. Plus, I don't want to do it in front of the earnings. So 13%. Maybe just do the call spreads. Let's see, Cisco. How much premium can you get from Cisco? 13% would be $7, so $7, so 40 put. Yeah, not enough premium. So I'm probably not going to do puts, but I would consider doing calls. I would consider doing calls. Because puts not enough premium, at least for now. But the call spreads, 7% it might rally. Yeah, so 50 call has enough premium. 50 call is about 17 cents, about 0.5%. So you can sell 50 call for 17 cents. But we'll wait till end of day. Fred, I'm personally not adding to any short position, right? I'm already bearish on the market. One day doesn't set the, trend. So I want to see a follow through. If semiconductors continues to pull back, I mean, this is only day one. If day 2, day 3, we are at 230, then maybe the trend is reversed. But for now, trend is higher. Personally, I'm not adding to the bank short bank, but I am short the banks, right? So now you have to decide what that position size should be. My proposal: don't risk more than $250 on a $10,000 portfolio. ADI is getting pounded. Let's see. All right, 170.10. What did I put the short stop? I'm trying to at least try to make it profitable. Okay, 170, 150. Doesn't look like all right. So 170. I mean, watch the elite circle. I'm gonna try to get into this short position. I mean, I have 85 cents. Ideally, I want to close it for 80. The short put for 85 cents, right? The short put for 85 cents and maybe make 30 or maybe make 50 or 60 cents on that short stock. So we'll see. Maybe this is a good time to short it. Okay, maybe half a position. I'll do the other half if it continues going. All right, so I'll short it at 170. 14. Okay. So I'm going to short it at 170.14, right? So short, and then I'm going to try to close it for, let's see, 169.23. 169.23. buy to cover. 30 shares at 169.20. 169.20. All right. So I'm going to try to close it and make $1. And, obviously close the 167 put probably for 80 cents at this point. Let's see. 80 cents. So in an ideal world, 80 cents, if I close it for 80 cents and I opened it for $0.85, right? Right. So I open it for 85 cents. If I can close it for 80 cents and then also collect $1 on the short stock, then this would be a profitable trade. If the market reverses like it did, yesterday with Home Depot, then I have to manage the, minimize my losses and close it. We'll see how far it can get. All right. Any other questions? Any questions on Discord? Into all the trades. All right, Discord guys, thank you for participation. We had a lot of people today. Appreciate your time. Please look at that. I put it in the stream chat. Let me put it here. Seems like you guys never ask questions, so I'm not sure if you can see it, but I put a trial. So you can get, if you go to the stream chat, you can get a trial of our software, 14 days for free. So use that link, and you can also, what else? And you can get the recordings of all these trades, right? And then obviously if you sign up, you can, Nurse Lady, thank you. All right, Nurse Lady, thank you so much. This is awesome. First response. You can sign up for the trial, right? You can sign up for the trial and get the recordings, and obviously next Monday, every Monday and Wednesday, participate live. Monday and Wednesday, participate live. All right, Discord guys, thank you. I'm gonna exit out of Discord. And then go to webinar. KSS, very volatile, yeah, sure. Yeah, Fred, probably just Cisco. I'm just going to sell calls on Cisco. Most likely that will be the trade. Fred, yeah, ADI, we'll see. We'll see if it can. I mean, it's getting close, right? I mean, if I can close it at 169.20, made $30, then maybe we can make it a profitable trade. We'll see. All right, that's all I have for today. I will do the closing bell today, and Scott will do the closing bell tomorrow. We're switching due to schedule. All right, guys, thank you very much, and have a